well. With me, Nandita Khemka. Well, TGIF, and yes, in the true sense of the word, we've had a heavy week. The markets were going nowhere when it comes to headline indices, but the mid-caps saw a very good comeback as well. Both on the mid-cap side and the large-cap side, we saw a very good rally. So bulls have made an appearance this Friday, and that's something to cheer this Friday. But of course, 25,000 back on the index, very solid recovery in mid-caps as well. The mid-cap index has outperformed, surged somewhere around 1.5%. Advanced decline ratio firmly in favor of gainers as well. Real estate, metals and PSU banks, these are some of the pockets that led from the front today. For the week, the Nifty PSU bank index is still down, by the way. And if you look at the metal pack, that's also in the negative for the week. But the kind of up move that we saw today, led the Nifty to regain some of lost ground. So for the week on the Nifty, we are up somewhere around 1 to 1.5% or thereabouts. In terms of some of the individual movers, then take a look at Jio Financial, Bharti Airtel, Trent, M&M, even Reliance Industries for that matter. That stock is up in excess of 2%. So yes, solid support coming in from there as well. On the flip side, just 3 or 4 laggards, and they are largely from the auto pack, which was witnessing some bit of buying over the last couple of days. Bajaj Auto, Hero, Maruti, these are some of the top laggards, and even Dr. Reddy's from the pharma pack, on the losing side. Quite a few movers on the mid-cap and in the mid-cap end of the market as well, but we'll take stock of that in just a bit. I just want to take you through the global cues. There's no big headline coming out of Iran, Israel today, and oil prices have cooled off after hitting $79. Perhaps that's another reason why we got some leg up in the market today. European markets are also trading in the green, but US futures, they are in the red, although Trump has said that he will take 2 weeks to decide on whether or not they will go ahead with a strike on Iran. Of course, they'll take 2 weeks to make up his mind. But the market may be hopeful that there would be some diplomatic dialogue, some diplomatic resolution coming in place when it comes to Iran and Israel. Perhaps that is one reason why we saw some bit of buying coming in. But to understand whether or not this is just a one-day wonder kind of a rally, let's bring on board Mayuresh Joshi, Head of Equity Research at William O'Neill India. Mayuresh, great to be chatting with you on this Friday afternoon in a happy mood. Markets were getting fairly boring because we were fairly range bound. But today, of course, good rally coming in. Do you think that we've climbed this wall of worry as well, or would you be cautious given the fact that things are still fluid? There is no resolution and there's not been any kind of de-escalation either.
Afternoon, Nandita, as you rightly said, TGI, thank God it's Friday. But I think the markets ended on a very, very positive note. What has really transpired has been the markets have been really resilient ever since the conflict started. And therefore, I think the markets have shown remarkable strength and stability all through these 8 days of conflict. But obviously, what goes over the next few days, whether you see renewed escalation or do you see some element of de-escalation happening, I think that is a large unknown at this point of time. But I think a large part of the markets are of the belief that with a large part of whatever has happened, a large part of that escalation might really be behind us. And somewhere I think we'll come to the table over the next few days. I think that is the presumption that the markets are going with, showing resilience and strength. But again, as you said, it's unknown. I think it's fluid as we speak. And again, even if you go historically, Nandita, I think whatever has happened in the past, wars create a sentimental and a knee-jerk dent onto the markets. But again, after a few weeks, once the war probably stabilizes or is largely over, it again starts focusing back on the core issues, which is earnings and global growth.
Okay, of course, those are the triggers, the next triggers, so to say, for the market. But let's talk about the financial space. That was one pocket that was in focus. The Nifty Bank Index has topped that 56,200 mark. Once again, a good 1.5% kind of an up move. And that can be attributed to the good news that came out from RBI's table as well, right? Final norms on project finance, they are much easier than what we saw in the draft. 1% vis-a-vis, provisioning of 5%. And of course, banks have taken it well. Those, lenders, large NBFC lenders like REC, PFC, IRUDA, all these companies are in focus. What's your preference? Those are pretty kicked in trade, and of course that also adds on to the good news that we got from the RBI policy as well. So how would you look at this space?
Oh, absolutely. Multiple tailwinds. RBI acted, front-loaded the interest rate. You've obviously seen the project financing rates come way lower than what it was earlier expected to be. Liquidity seems abundant into the system. Government capex is well and truly on, specifically in areas like infrastructure, energy. And therefore, I think the expectations that are largely getting laid out is private capex at some point of time should probably start coming back as we head into the second half. And therefore, I think as a growth mechanism, BFSI as a space has always been the backbone in terms of providing liquidity and growth. And RBI has given enough ammunition in terms of growth dynamics for the sector. And it's not just the sector. I think it's all the sectors which are expected to remain to receive financing, which have received a lot of impetus as well. And therefore, with rates going down, with abundant liquidity into the system, growth capital is readily available, which is absolutely needed for spurring GDP. Government capex obviously abates, and therefore, as private capex comes back along with a rebound in consumption, my own sense is that BFSI as a space might continue doing well. Obviously, the CASA deterioration that you've probably seen with rate cuts, there will be some element of deposit cuts as well. But I think deposit growth should be stable if it's not growing or degrowing. And therefore, I think the entire mechanism as a base case for BFSI should grow. NBFCs, leadership NBFCs should continue doing well in this aftermath, in this backdrop, sorry, because the reasons are pretty clear. They've got better dynamics in terms of their credit underwriting. They've got diversified sources of borrowing with a rate cut and a better credit score or a credit rating that they've got and better underwriting. I think they can balance their balance sheet growth very, very well. And therefore, leadership NBFC stocks might continue doing well. So we remain very, very optimistic on stocks like Shriram Finance, PNB Housing within the housing finance names, and even your project financiers, what RBI has probably done in terms of draft norms. Your PFCs, RECs might continue doing well because there is going to be a tremendous outlay that happens in terms of capital spending as far as transmission is concerned, as far as new power projects are concerned. And that itself will mean that a lot of government heavy lifting is something that PFC REC will do, ensuring that the risk probably are mitigated because of government contracts. Cash flows remain strong, and therefore dividend yields also become a very, very attractive proposition. So anybody holding PFC REC should continue.
Sure. Another crucial thing that I want to speak to you about is HDB Financial IPO. It hits the street next week. The price band came out today, 700 to 740 rupees per share. It's a big IPO. HDFC Bank in focus as well. What's your sense on the valuations, if you may?
Fair, Nandita, to be honest. And therefore, I think how do they protect its growth is going to be very important. I think, again, it's a very hyper-competitive environment that they will be operating out of. And therefore, growth at a reasonable cost is going to be extremely essential. Specifically, I think when it comes to asset quality, specifically when it comes to the return ratios. And therefore, from a valuation perspective, it's fair. It's a competitive field that they're probably entering into, and it's a big IP.
Last question. I know I have to let you go, but Dream Folks, if you are tracking that stock, any thoughts? There was a knee-jerk reaction on the stock yesterday on reports of loss of clients, but the company was on, the management was on CNBC TV18. They, gave out a clarification saying that the issue was relating to last year and contracts are all intact. But the street doesn't seem to be buying it because the stock did see a good positive reaction, but it came off, ended the day in the red. Any thoughts if you've looked at the stock, Dream Folks?
I've not tried that very recently, but again, I think uh, if you are probably wanting to bet on travel and tourism or hospitality as a sector, I think the leadership hotel stocks, in my opinion, are the best bet.
Okay. All right. Got your point, Mayuresh. I wish we could have had a longer conversation, but I will let you go. I won't keep you any longer, but I will connect with you next week as well sometime. So keep yourself free and have a great weekend. All right, I think we've lost Mayuresh there. Okay, let's bring on board our next guest for today then. Joining me is Ashish Bahety, Technical and Derivative Research Analyst. Ashish, lovely having you here on the show this afternoon. 25,000 back on the charts, but the swing high is somewhere around 25,132 or thereabouts. But I think we've lost the connection with Ashish. We'll come back to him, but as promised, let's just take a look at some of the mid cap movers in the market. Yesterday, there were hardly any high flyers from the mid cap space, right? You had stocks gaining 2-3%, but today we had some high flyers because we saw a very solid rebound when it comes to the mid cap index. 1.5% up move, outperformed the benchmark indices as well. So we had high flyers in the form of Vari Energies. That stock was up 12%. BEML up in excess of 8%. Ratan India 7.5%. Endurance Tech, Premier Energies, K Fintech. These are some of the movers. On the other side, you had stocks like Concord Biotech, Eris Life, AstraZeneca. They were among the laggards. But bringing on board Ashish Bahety then. Ashish, lovely chatting with you this afternoon. 25,132. I think that was the swing high on the Nifty today. We still didn't touch that 25,200 mark, which is being pegged as a crucial resistance level for the Nifty. But today's move, would you call it the breakout move that everyone was waiting for, or would you say it was just a one-day pop and it could perhaps fizzle out next week?
Good afternoon, Nandita. I'll say it's a perfect move or a welcome move by Nifty, where we have seen not just Reliance, but even HDFC and ICICI, and along with Bahety contributing. So there was a broad-based rally today, and that's a positive sign for the market. The way HDFC has broken, it's a crucial juncture or a very positive, and the entire bank Nifty was contributing very well today. So I think Nifty is well placed to move to 25,700 mark. We're expecting another 600 to 700 point rally from here this point. I think Reliance is very crucial at this point, because the way Reliance has moved has given a clean breakout today. I think it is heading towards 1500 zone very soon. Yeah.
Yeah, we got good support from Reliance. In fact, this stock has been doing fairly well. Last 3 months, it has seen a very good 24% up move, so to say. But talk about some of the auto names. They kind of lost favor. You had top 3 names that were laggards in trade: Bajaj Auto, Hero Moto, Maruti Suzuki. But this comes after good moves that we saw over the last couple of sessions. So would you look at this dip as a buying opportunity in some of these names?
Yeah. See, I think specifically in terms of auto, there's four-wheeler autos been doing fabulous. We have seen a good move in M&M, and even Eicher has been doing good. And Maruti was fairly flat, but I think one should focus on rather than two-wheeler, one should focus more on the four-wheeler side. On the two-wheeler, I think Escorts is one stock which has been doing very good. So one should keep a focus there.
All right, keep your eyes out for Escorts doing well, and focus on four-wheelers more. That's the call. But banks, 56,200 has been cleared once again. Would you expect this pop to continue further, or to see more upside on the bank Nifty, because 57,049 or so, that was the life high, on course to touch 57,000 again?
Certainly, there's been series of positive, I'll say, positive feedback from the RBI side, and there's been consistently, we're seeing some policy changes which has been very positive for the bank Nifty as a whole. The way Bank Nifty has given a breakout about 20 demo today, it's well placed to head towards even 57,500 mark. So we're expecting another 1,200 to 1,300 point rally from here on Bank Nifty. I think the bank which will lead the entire rally would be HDFC and ICICI Bank.
Okay, those are the two banks that could lead the rally. But Vari Energies, a 12% up move. Premier Energies up 6.5%. These two charts, do you see more upside? Is this the start of a breakout, or how are you looking at this up move today?
It's been a clear price volume breakout today on the charts, and the way it has moved along with a good volume. I think almost 13.5 million share volume traded today. with a high delivery volumes. I think Wari is well placed to touch to this recent high of 33,300 mark. So one can go long in any of the dip. Don't chase the momentum right now. Any dip can be used as a buying opportunity. Anybody is holding long should certainly keep a stop loss of 2850.
Bharti Airtel, one stock that hit a fresh 52-week high today, 1949. Looks like 2000 is on the horizon.
This stock has been one stock which is has performed in all seasons, despite whether it's a global uncertainty or a domestic uncertainty. This stock has always moved a high, have made a higher highs. And the way Bharti is heading now, I think it's well placed to. It's already made a new high today, and it's well placed to surpass 2000 mark. So anybody is holding long, just trail the stop loss on the upper side and hold it for 2000 plus levels.
Okay, that's the view on Bharti Airtel. Another pocket that I want to talk to you about is the IT pack. This IT index is the top performing index for the week. Good pop in recent times in some of these IT names. TCS, Infosys, anything catching your attention?
We are more bullish on the mid-cap IT compared to the large-cap IT. I think there's a lot of headroom still available in the mid-cap IT. And the way even the disruption is happening in whole IT as a pack, mid-cap IT will be least affected because of this whole disruption from AI or generative AI as a whole. In fact, they'll be the beneficiary of this. So our topic remains from the IT pack is the persistent system and OFSS or Oracle along with the Coforge. On the large cap IT, I think HCL Tech is the only stock which we are liking at these levels, and I think it will outperform the other names like Infi and TCS.
Okay, HCL Tech, only a large cap IT stock looking attractive on the charts for Ashish. But Ashish, before I let you go, what would your trading recommendations be for the coming week?
I think the way defense stocks has again started moving, so Muscat Dock one should keep in the radar. It has, despite the recent fall, I think the stock is very well placed. The risk reward is very favorable, so one can keep a stop loss of 3150 and can keep a target of 3500.
Okay, watch out for that particular stock, Muscat Dock from the defense space. But with that, Ashish, would like to thank you for taking out time and joining in this afternoon. Always a pleasure, and we've ended the week on a good note. Hopefully, you'll have a great weekend and rest well.
Same to you as well. Thank you.
Thank you. Thank you. Well, on that note, we've come to the end of this edition of Closing Bell. It's turning out to be quite a boring week, at least for the headline indices. But Midcap saw some pain over the last two sessions, but nothing to complain this Friday, because not only did we see 25,000 making a comeback, with bulls making an appearance this Friday, but also the mid-cap index, came back with a vengeance, a 1.5% up move on the mid-cap index. That has in fact led to weekly gains for the market as well. So yes, it was a good close by the end of the week. Although the situation in the Middle East remains volatile, let's see what things happen or how things really pan out over the weekend. But for now, we've had a good positive close. So yes, on that note, I would like to take your leave. Thanks a lot for tuning in and watching Closing Bell. Of course, have a great weekend, rest well, and let's see what happens over the weekend when it comes to geopolitics, because we will be certainly reacting to that on Monday morning. So see you guys on Monday. Have a great weekend and rest well. Thank you from everyone here on Money Control.